What's up, everybody? It's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. The purpose of this channel is to help as many people as possible become independent and profitable traders because when I tell you guys, this is the key, this is the answer, this is the way that you can work from home or work from anywhere and make as much money as you want. All you have to do is really get serious about it. All you have to do is get disciplined, and all you have to do is learn the skill, right? Now, it may be a little bit of hiccups, a little bit of bumps, because this is like learning a new language. But once you learn that language, you're good to go, right? It's like riding a bike. Once you learn how to ride a bike, you just don't forget. It's a skill that you have for life. So I encourage everybody to at least look into it. There's nothing wrong with making more money. There's nothing wrong with diversifying your investments and to really just add more skills to your life because it may not be able to help you, but it can help somebody else, and you never know. So for people who are new or returning, thank you guys for trusting me with your Forex education. Thank you for trusting yourself to really take this leap of faith and to learn this because I know that if you stick with it, you will get the results that you seek. If you are new, I do have a bunch of playlists and other Forex education videos where you can learn in a little bit more of a linear process, even though trading in general is non-linear. But I did try to help as much as possible by learning, putting it in a way where you can build on your information in a logical way, right? So today's video is going to be about the market breaking structure, right? And using a break of structure as your entry point because there's so many different ways that you can trade. There's so many indicators, there's so many strategies, but it really all comes down to market structure, right? And market structure is what is the market doing? Is the market buying? Is the market selling? Is the market ranging or staying in a particular area for a certain amount of time? So in my previous videos, I did teach you guys a little bit about the double EMA and the momentum indicator strategy. And I'll just do a brief overview right now if this is your first time watching this type of video. So these two lines right here are called moving averages. One is my 50 EMA, which is the blue line, and one is my 20 EMA, which is the purple line. Now, the easiest way to use these indicators is just to take note of if the candles are above the EMAs, right? It's letting you know that price is above average and the market may continue to go up. When you find that the candles or these price action snapshot bars are above the EMAs, you're going to want to focus on buys, right? You want to focus on buys because if price is above average, it may continue to go up. So while there may be opportunities to sell, you should only take buys when the candles are above these lines. So we can see that demonstrated right here, right? We can see that the candles crossed above both EMAs, and then it actually continued to go up. It came back down. It continued to go up. It came back down. But all in all, it continued to reach from here to here. And that's simply because the candles are above the EMAs, right? Now, vice versa. If you see that the candles are below the EMAs, you're going to want to focus on sell opportunities, which we can see in this case, the candles cross below the EMAs, saying that price was below average, and then price actually continued to drop, right? It dropped from here all the way down to here until it crossed back above the EMAs here and then started to have a little bit buying motion. Now, it's not to say that you won't get sells when candles are above and that you won't get buys when candles are below, but you do want to trade with the trend because it gives you a better opportunity to make money instead of losing money. Now, to combine the EMAs with the momentum indicator to give yourself a strategy, you're only, and this is something that you can take note of, right? You're only going to want to take buys when both of these things apply. You have the candles above both EMAs, but then you also have your momentum indicator above zero, telling us that the momentum for a buy is pretty strong and that the market is going to continue to go up, just like it did. Vice versa, if you see that the candles are below both of the EMAs, which we have demonstrated here, plus the momentum indicator is facing down or below zero, even if it's slightly, you're going to want to focus on sell opportunities. The best thing you can do is to trade with the trend. So one more time, candles above both EMAs, MOM above 0, you want to buy, right? Candles are below the EMAs, MOM is below 0, you want to sell, right? And if you want to know more about where to set your stop loss and where to set your take profit, you can watch my video, Intro to Pips, Take Profit and Stop Loss, because that will give you a lot of insight. Or you can watch my newest video all about liquidity and giving you information on where to set your stop loss and take profits based on previous highest highs and lowest lows. Now, again, today we're going to be talking about market structure and what happens when the market breaks structure. So I'm going to go ahead and turn these indicators off just so that we can look at the naked chart and really see what's going on here. So I just want to get a good view, right? And I want to have enough data to analyze. So we're going to look at everything, right? We're going to look at everything that's happening right here on our chart that we can see. So first and foremost, what you will notice about the market is that although you can have these selling trends, right? And while you can have these buying trends, the market is never 100% going one way. It'll go down for a while, right? Then you'll have a little bit going up. It'll go down for a while, then it'll go up, then it'll go down, then it'll go up, then it'll go down, then it'll go up. And even if it's just small noise like this, you'll always notice that this pattern is consistently happening, right? So a lot of people, I noticed that when it comes to establishing a trend, they can easily see it once it's happened. Like we can clearly see that this is a downtrend, right? Just like we can clearly see that this is a small uptrend. A lot of people will notice it after it's happened, but they don't really know how to determine what's going to happen next based on what's already happening, right? They don't know how to determine what's happening right now, but they can establish it once it's already been done. So one way to really establish the trend is to look for a break in structure, right? And I'm going to explain what that means. A break in structure is literally exactly what it sounds like. The market was doing a certain thing for a certain period of time, and then it decided that it didn't want to do that anymore. It wanted to actually choose a side. So when the market can't decide and it's ranging, right, like this, it's ranging. There's no clear direction. You have your area of resistance, which is a point in the market that price is having a hard time getting above. And then you have your area of support, which is a place in the market where price is having a hard time getting below. Now, we can see here, right? Let me just delete all this. We can see here that the market was staying in this zone for some time, right? We can see that the market was staying in this zone for some time. But then we can see that this candle, right, this long red candle, it broke structure on the downside. That means that it came and it broke past this low area that the market kept previously revisiting. So we saw the market revisit this area 1, 2, 3, 4, 5, 6, 7, 8, 9 times. The market revisited this same area that it had a problem getting lower than until it broke structure, and then it actually decided that it was going to become a selling market, right? Now, if we were to add our indicators back, we would probably notice the same place where there was a break in structure. There was also the momentum line that was either facing down or crossing down, and these candles should be below the EMAs. So let's just add our indicators back to see if that's actually true, right? And it actually is true, right? We have our candle falling below both EMAs. We have the momentum indicator that is facing down, and then we eventually have the cross down on this candle, right? So that is an example of how break of structure can help you determine whether or not you should focus on the buy or for the sell, right? So I'm going to turn off these indicators again, because your indicators really are there to support what you already see. I don't want you guys to become dependent on the indicators. and then not know how to trade, I want you really just to understand that they are there to support you and what you are already seeing. So let's see if we can find a buy example for when the market broke structure on the upside. So we have some resistance here and we have some support here. Remember, resistance is the area at the top where price is having a hard time getting higher than. Support is going to be an area at the bottom where price is having a hard time getting below. So in this case, we have 1, 2, 3, 4, right? 5, 6, 7 rejections on the upside at this area of resistance before the market broke structure with this candle and it continued to go up. Now, if we add our indicators back, we should see at the same place where the market broke structure between these 1 or 2 candles, the market should also be falling above both of the EMAs, and the momentum indicator should be facing up or above 50, which it was. So break of structure is really an important thing to be able to recognize so that you can know whether you should be taking a buy or sell on the next trade. Now let's turn these indicators off again and let's find another example in the market. Because that break of structure is a really important signifier, and it will help you to build your confidence when you are taking these trades. So let's just look right here. So we see that the market was ranging, right? Even if it's for a short amount of time, we see that the market went up, it came down, and went up, it came down. Before, what happened, guys? We had a break of structure on this candle, and then we see that the market continued to sell. Now, once we add our indicators back, at the same place where the market broke structure between these 1 or 2 candles, we should also see that the candles are falling below the EMAs and the MOM indicator should be below 0. So let's go ahead and add our EMAs back, right? And we can also see that exactly what we are looking at is exactly what happened, and it's also confirmed by our momentum indicator. So I'll do one more by example, and then I'm going to end this video because it really makes sense, guys. Just practice, practice, practice. There's no rush to get into the market and to use your real money. You can use a demo account, and once you do this enough times and increase your win rate, you will have the results that you want. So let's look here. We can see clear structure, right? We can see clear structure. We see that the market went up, it came down, it went up a little, it came down a little, it went up a little, it came down a little, it went up a little, it came down a little. And then what do we have? We have a break of structure on the upside. This was the candle that broke the pattern, right? Now, if we add our indicators back, we should see that between these 2 candles, right, or even these 3 candles, they should be falling above both of the EMAs and the MOM should be above 0. So we're going to add our indicators back. Just like clockwork, we can see that on the candle that broke structure, and the MOM indicator is also above 0, right? So that's really all I have for you guys today is when you really put your indicators together with the break of structure, you'll notice that you find yourself getting into a lot more profitable trades, right? And again, you'll see this happening over and over and over again. You just have to look for that break of structure to either the upside, right? Or you have to look for that break of structure on the downside, right? So I really hope this video was helpful. This probably was one of the shortest and most cohesive Forex education videos that I've done. But if you can learn to recognize this and you can master market structure and understanding this, you will be a more independent and profitable trader. So if this video really resonated with you, I hope that you will like, comment, share, and subscribe to the channel. If you are looking for personal mentorship, which is a little bit more intimate, you can follow me on Instagram at Money Mantra Cha. That's MoneyMantracha. My information is down below in the description box. You can get mentorship plans on a monthly, quarterly, or annual basis. I do have live classes. I do give out trade ideas and do live chart analysis with everyone who's in the class. So if you are interested in learning this and taking this more seriously, please, please, please reach out to me. But that's all I have for you guys today. I hope that you have a peaceful and profitable day, and I'll see you on the next episode of The Money Mantra.